Where is the Chancellor? It is a bitter regret that at this difficult time of these serious issues, she herself is nowhere to be seen.
Rachel Reeves aimed to kick off the year by cementing her global reputation with high-profile trips to Beijing and Davos. Her goal? Shift the conversation from Labour's £40 billion tax-heavy budget to ambitious plans for reigniting economic growth. But instead, Reeves found herself watching the markets spiral and her credibility wobble. A dramatic sell-off rattled the UK government bond markets, pushing borrowing costs to their highest levels since 1998. Sterling also took a hit, leaving Reeves in damage control mode. But what caused this market panic? Surprisingly, there was little new UK data to justify it. Instead, rising US bond yields and fears of stubborn inflation played a role. But deeper, UK-specific concerns are stirring the pot. The UK economy is barely growing, yet wages are rising, a dangerous mix. Retailers are warning that Reeves's hike in employer national insurance contributions will drive up prices. Investors are now whispering a dreaded word, stagflation, the toxic combo of stagnant growth and persistent inflation. The Bank of England seems hesitant to cut interest rates, stuck between battling inflation and supporting a slowing economy. One cut might come in February, but beyond that, it's anyone's guess. This uncertainty is fueling market fears about the sustainability of Reeves's tax and spend plans. Economists warn this market chaos could spiral. Higher borrowing costs feed concerns about the UK's fiscal health, causing further sell-offs. A dangerous loop. Reeves's £9.9 billion headroom could vanish in the blink of an eye. The Treasury tried to calm nerves, hinting that Reeves might cut future spending to stick to strict fiscal rules. But critics say this reveals the absurdity of Labour's economic strategy. Tight rules, no flexibility. Campaigners for child poverty relief and public sector pay are now bracing for disappointment. Business groups are sounding the alarm. Retailers argue that higher national insurance costs will force them to raise prices, squeezing consumers already battling the cost of living crisis. Small businesses warn this could lead to layoffs and closures, further choking economic growth. Small business owners express frustration, saying the additional tax burden threatens their survival. Economic analysts warn that consumer spending, a major driver of growth, could take a serious hit, pushing the UK closer to recession. Labour insiders argue Reeves's budget is pro-growth, linking public service funding to economic recovery. NHS funding, support for local councils, and investments in infrastructure are designed to fuel long-term growth. But will it be enough to calm jittery markets? Some analysts are more optimistic. They believe inflation will drop significantly in 2025, paving the way for the Bank of England to cut interest rates. HSBC predicts up to 6 rate cuts next year. If that happens, Reeves might regain control over the economic narrative. All eyes are now on upcoming inflation data and Reeves's planned speech at the end of January. Will she offer a clear strategy to reassure investors and voters alike? Or will the pressure keep mounting? History has shown how unforgiving the markets can be. Many past chancellors have learned the hard way that investor confidence is fragile. Reeves must now navigate these economic minefields carefully. Public confidence is also wavering. Citizens are questioning how Reeves's policies will impact their day-to-day lives. From rising grocery bills to potential job cuts. Some support her pro-growth agenda, while others worry that Labour's promises are built on shaky ground. Rachel Reeves wanted to showcase her economic vision on the global stage. Instead, she returns to a fragile UK economy and markets on edge. Can she steady the ship? Or will rising borrowing costs sink her plans?